Tiny bit of red ink on the screen. Dow, S&P, NASDAQ down, very small amount. Mike Lee with us. Hey, Mike, you used to be a Super Bowl. What's it going to take to get you back there?
Stuart, we've got to go through some pain economically and with the markets. Roughly April, May of this year, housing turned, and it has really decelerated quickly. Right after that, manufacturing did the same. I think we're about to see it in earnings. Then hopefully unemployment will spike and we'll get a true pivot from the Fed, not just a slowdown. So I just think it's going to take some time.
So you're talking well into next year before you see a real bounce possible.
Yeah, well, first or second quarter, I think somewhere towards the end of the first quarter, because the economy really hasn't felt the full effect of the Fed rate hikes. There's a 3 to 6 month lag with every single one of them. We only started hiking in March of this year. So by the time, by about January, February of next year is when you're going to really start feeling it. And if they continue to raise into the end of this calendar year and maybe pause in the beginning of next year, going into April, May of next year is when it's really going to be hitting the economy hard, just as housing's collapsing, earnings are falling off a cliff, and the same thing with manufacturing. And typically at that ugly moment when it looks like Armageddon, that's when you want to switch from being defensive to aggressive.
So I can see why you're not at this moment a Super Bowl. Now you tell me, you've got about 45 seconds. Can you tell me which defensive stocks would allow me to ride out this rough patch that's coming up?
Yeah, so I own energy, XLE, consumer staples, XLP, utilities, XLU, and healthcare, XLV. That's all the stocks that I own right now. I think energy, there's more upside than everything else. It's a lot more volatile than the other sectors. But to me, that's a good place to hide, and short-term treasuries are paying over 4%.
Yeah, short-term treasuries. The short-term treasury that pays you more than 4% with a tax break at the far end and no risk if you hold it to maturity. Yeah, I've been saying that for a long time, and it seems like it's working. Mike Lee, good stuff. See you again real soon, I do hope. Thank you very much indeed.
Thank you,
all right, we open this